rebound in 2014 and remain strong going forward with strong growth in non-oil sectors. In the non-oil sector, Nigeria's macroeconomic performance has been positive over the past year, with real GDP projected to have decelerated slightly to 6.3%, reflecting the effects of the nationwide strikes in early 2012. In an exclusive interview, CNBC Africa's Umu Ibrahim discussed Africa's economy and Nigeria's economic and financial outlook with Mr. William Scott Rogers. Take a look.
I think the most important things for African economies to do, and the list has not really changed that much in the last 5 or 10 years. I think a lot of progress has been made on the list. But these are things that, people talk about this a lot, structural reforms in terms of power, not just cheaper power through new technologies, better technologies, but more reliable power, better security, better roads, better port facilities, more ease in paying taxes, better access to finance, more efficient judicial processes that allow contract resolutions to be resolved relatively quickly. These are all the things that have an impact on the cost of doing business. And business is becoming increasingly global, right? I mean, companies put different operations in different parts of the world. And for them to locate in Africa, which is what Africa is going to need to really sustain long-term growth and to plug into the global economy in terms of manufacturing and services, it needs to continue improving this overall environment. I think what Africa has done well, and is why it weathered this crisis relatively well, I think, is in terms of macroeconomic management. 20 years ago, we were seeing inflation rates of 100% in Africa. You just don't see that anymore. In the next stage of reforms are these others that are not easy. They're quite difficult. And I think that's where the future of Africa in terms of its sustained growth really lies.
Nigeria has seen an increase in growth of about 6% in 2013, as well as a decrease in inflation to single digit. But despite the bright outlook, there still exists infrastructural, security, and energy challenges. Now, your thoughts on how Nigeria should bridge this gap?
The financing that the IMF provides is becoming less and less important for Africa because of the success that African nations have had in things like exchange rate reform and their overall balance payments and building up international reserves and getting a handle on external and domestic debt. So it's really a matter of putting this other financing to good use. But I think that the real challenge for Africa is coming back to this issue of the overall environment for investment, is to unlock private sector investment. I think we had this point I made last time we spoke, is if it's an investment project or something that the government wants free public access to, the government has to provide that. City roads are a perfect example, right? But even intercity, interstate roads that you want free access to, the government has to pay for that. But provision of power, independent power producers, or even provision of water, and a number of other infrastructure services can be provided by the private sector, but you have to create the environment to induce them to do that. And that, again, is where the challenge for Africa lies, in Nigeria as well.
The health of the Nigerian banking sector has improved considerably well over the years. We've seen credit to private sector grow, banks fully capitalized, more work on consolidated cross-border supervision. What more needs to be done to have a more sustainable and stabilized financial sector and financial sector supervision in the country?
I think it's proceeding with the plan the central bank has, but also the other agencies involved, like the NDIC, is to strengthen their own internal capacity. I mean, banking supervision is a highly skilled profession. Requires highly educated, highly trained people, and I think that you need to continue working in that regard. So it's developing the skill base, and they're working to do that. The second is to continue making progress in what we call the lack of forbearance, right? Is to act early and act firmly, right? You have to realize that in every growing economy, businesses are born and they die, right? That's part of the process. And it's also true in banking sector. So what's important is when a bank gets in trouble or you see it's getting into trouble, get in there quickly and resolve it quickly and try to preserve shareholder value before